Hey guys, before we get into the video today, I just want to give you a quick heads up that in this video we're going to talk about a stock, and that stock, since recording the video, has had an earnings call, and it's my fault because I've been sitting on the video for a couple of weeks and I haven't edited it. So just a heads up, the financials that we use in this video are based off the previous earnings call, but other than that, enjoy the video. Hey guys, welcome back to a new video on Luc and Papa investing. Sorry it's been a while.
Yeah, we've been busy.
Yeah. I'm Luke.
I'm Papa, also Shiraz.
And yeah, thanks for watching. We're gonna try to keep a more consistent schedule going forward. We like making these videos, but
His fault. He was in France for a month.
sorry about that. So just before we get into what we're doing today, just a quick reminder. What we do is me and my dad, we put in some money every week into a joint account, and we choose some stocks that we want to invest in. And we were doing this before we made the YouTube channel, but it was a way to formalize what we were doing. Yeah.
Yeah, and obviously we're putting some work into the research and trying to come up with good ideas and share them with you. But as a reminder, here's our disclaimer. This is only for discussion and entertainment purposes only. You definitely should consider this advice and do your own research before making any investment decisions.
Yeah. So let's get into this video today. Today is also going to be a little bit of a different video. We're going to be diving into our portfolio, possibly looking to buy or sell one of our stocks that we already have. But all of our other videos have just been more looking at newer stocks and buying newer stocks. So today we're kind of taking a step back.
Yeah, I mean, we said we would do this once a month, and we haven't been that good about it. The last time we did this was in our March video. So I think we're going to try to just periodically, maybe monthly, look at the portfolio. So here's a snapshot of E-Trade, which shows like, okay, according to the current portfolio, it shows up 8.5%. That's not quite our performance, right, Luke?
Yeah, so looking at the basic snapshot, it's whatever, it's average, but E-Trade isn't taking into account the cash from our exits. Some of the companies have gotten bought and they gave us cash for that, and E-Trade doesn't calculate that in our returns. So what do we do to make up for that?
Yeah, exactly. We did a little Google sheet. So basically just to include the current value, but also to include those two distributions that we got for when CoStar Group bought Matterport and when Zora was bought by a private equity shop.
Yeah.
We did this out here. Yep.
Just to recap, we got cash for Zora, and for CoStar Matterport, it got converted into 50% CoStar stock and 50% cash. And so, it doesn't account for that. So we wanted to, be proud of what we've done and
exactly get the credit for our performance. Yeah. So it's not 8.5%. Once we account all that in, it's actually 14.4% total gain. But obviously everybody compares performance on an annualized basis. So we could then look at that on an annualized basis by putting in the Google sheet kind of each cash flow and doing an IRR. Actually, it's an XIRR. And here we go. We ended up with a 24.5% annualized return, which beats the market.
Nice job.
Hope we did it right.
Yeah, maybe we're just lucky. I don't know. We'll see.
Actually, for those of you finance, nerds, we're going to just share the Google sheet. So we'd certainly appreciate a quick check and letting us know if this makes sense to you. But if it does, S&P 500 IRR from when we started investing to now was 19%. Obviously, it's been a good market. Dow Jones 11%, Russell 2K 11%. So we're doing okay.
Yeah, but for sure, check it out, and please leave us feedback for, we love reading your comments. We just want to put in a quick word like, please, we love the feedback on anything. It feels good to know that people are watching the videos.
Yeah. Before we talk about diversification, we kind of skipped over it a little bit, but the best performing stock we've gotten so far was Matterport, which is now CoStar. With that, cash exit, 223%. So that's been definitely one of the drivers in our portfolio. And then gambling.com has been the not so good one, right?
The worst one, huh?
Yeah.
Sorry if you bought that one.
Well, hopefully hold that thought. We'll come back to it.
Yeah.
All right. Should we talk about diversification?
Sure. So I'm sure as many of our audience knows, diversification basically means just spreading out for stocks. It could mean in industries, spreading out into different industries. You know, you don't want to have all your money in the coal industry, because what if the coal industry collapses? You know, you're screwed. And it's important to diversify not only throughout industries, but also through market caps, which we kind of started off by saying, you know, we're going to focus more on small cap companies, but we kind of changed our point of view on that.
Yeah.
And we think it's important to have, you know, small cap companies, but also mid to large ones too, you know, it's diversification.
Yeah, and we'd love to hear from you. Just, you know, if you have a point of view, how many stocks is a good number to have in the portfolio? I mean, if you have too few, you're not diversified. If you have too many, it's kind of hard to manage. And we'd just be curious what you think are the biggest things to think about in terms of diversification. Anyway, this, as Luke was saying, is kind of just showing you how many we have. Most of ours right now are in the kind of large cap, 10 to 200 billion, but there's some smaller ones there too.
Yeah.
All right, the next thing maybe you could say a word about this is kind of our buy, hold, sell range chart, right?
Yeah. So if you've been watching our videos, I'm sure you're familiar with the buy, hold, sell range we put up when we're going into a stock. And of course, all the stocks we've bought have been at a buy range for what we predicted when we buy them. And what we can do with better investing is, for our portfolio, we can look at every stock in our portfolio. We can kind of come up with a buy, hold, sell range for each of our stocks. And it's a ratio. So from here, you know, we're going to look at the ratio, and we might look into the ones with the highest buy range or the lowest sell range, for example.
Yeah, well said. And specifically this second to last column, or the one rather that says US versus the upside downside ratio, that is just showing how much headroom there is between the current price today and what we forecast as the high price versus, you know, how much room there is between the current price and our forecasted low price. So the bigger this number is, the bigger the upside versus downside, the better that is in terms of a stronger buy.
Yeah. So as you can see, gambling.com, our worst performing stock, has the highest buy side for our portfolio. And so because of that, that's also a focus of this video. We took another look at gambling.com, and we're going to see if we should buy it or not.
Which makes sense, because if we liked it on the fundamentals, you know, a couple months ago, and then the price dropped by effectively 18%, if the business is fundamentally still doing well, then it should be even a stronger buy. So
exactly.
Let's do a little bit of research. We did a little bit of that. We'll try to click through it and see if that makes sense to you, and we can communicate this.
Yeah, so just a quick reminder, gambling.com was our second video on the channel, and we broke down what they do, how they make money, all that, the fundamentals, and a while ago. So we highly suggest that you guys go back and watch that video if you haven't, or if you want a refresher. But we'll give you guys a quick summary. Gambling.com, it's not like a casino. It's an affiliate marketing program or company for gambling. So what they do is they use like Google, and they find people who could be potential gamblers, and they essentially refer those people to the big casinos, and then they get paid for it.
Yeah, exactly. And they also recently acquired a business put them into the subscription data business, specifically around sports data and odds data. So it's primarily an affiliate marketing business, but they also have some data streams now.
Yeah, exactly. And when we were looking at gambling again, what's so appealing to us is just like the growth and the cash.
Yeah.
Like, it's insane. You know, they're a small cap company, $380 million market cap, but they have a bunch of cash.
Yeah.
$40 million in revenue, which is a 40% growth from last year. And like the numbers of growth, it's just like, it's outstanding. Like we think we're like, are we missing something?
Yeah, I mean, we'd love to hear from you, because we did the first research and video in March, and they had a Q1 earnings call in May, which we listened to. And here we're showing you the key metrics that came out in that quarter. And we're like, okay, let's see if the metrics are still good. Like Luke said, the revenue growth is outstanding. The operating income, or EBITDA, is up 56%. The EPS, or earnings per share, if you've been listening to our videos, you know we do a lot of our calculations off of that, up 63% year over year. And like Luke said, this company generates a lot of cash. Their free cash flow is $10 million in the first quarter, up 25%.
Yeah, and to put it simply, the numbers are amazing. They're growing by an insane amount, and yet their stock price is dropping. So that's why we're taking this time to do another deeper dive, because we think it's a good high value company, and the price is dropping. So we think it's a potential time to buy.
Yeah, and we won't go through the whole analysis again. Definitely, as Luke said, refer to the last video. We did make some adjustments. For example, instead of forecasting 12% EPS growth, we brought that down to 10 and 10%, and we made some other adjustments, and still came out with a very, very positive, upside downside ratio. It still came out very strongly in the buy range, even when we kind of looked at all those different assumptions. So, we're not going to go through all of these, but we'll just pause here for a second, and then we'll just touch on some more qualitative comments. But anything you care to add on the numbers here?
I mean, I'm just saying we're using conservative estimates, and then mind you, this is still the highest upside to downside ratio in our entire portfolio.
Yeah.
And there's other stocks that have way outperformed gambling.
Yeah, I mean, just to give you another data point, the high PE, the assumption that we're using for the high PE forecast is 20, but like really high growth companies sometimes get PEs of 30, 40, 50. So we think we're being, conservative, but if you guys have a comment or have familiarity with this industry, let us know if we're missing something.
Yeah, I mean, I think that's an important segue into risks, because of course, not everything is about the numbers. If you've been watching our channel, we take a lot of pride and value into looking at the numbers for assessing if it's a high quality growth company.
Yeah.
But there are, of course, risks and also upside possibilities that don't have anything to do with the numbers.
Yeah, absolutely. Should I start us off with some of the risks?
Yeah, go ahead.
I mean, I think the big one they talk about is the sustainability of the business model. They have a lot of dependency on Google search. And they're like, okay, what if everybody stops using Google, or Google changes their algorithm? All that traffic could stop, or, that's one.
Yeah, I mean, for sure, that's a big risk. Like, they rely pretty heavily on Google. And like we talked about earlier, diversification is important. And they don't have a lot of diversification on their affiliate marketing business. So,
you want to touch on a couple others?
Yeah, so another potential risk is AI. Lots of people are worried that AI is going to take over Google in terms of search engines and whatnot. And this could affect gambling, because they currently pay Google for advertising and for data on potential users. And if AI takes over, they might have no potential way to get data from, potential gamblers and whatnot.
Yeah, this was really interesting, because an analyst asked this on the last earnings call. And the CEO, obviously, is always going to be a little bit optimistic, but he was making the point that the generative AI results and traffic are just incremental and additive to the search. And he also made the interesting point that they don't have to pay for that. So there's a scenario where ChatGPT and others could just turn on a lot more traffic for them, and they don't have to pay for search ads like they do for Google. So it actually could help their expenses, which was an interesting point.
That's an interesting point, because a lot of their net worth is spent on paying for the Google ads, because they depend so much on the search engine optimization that they spend a lot of money on it. But I think another important risk too is their customers, their affiliate marketing. They don't own their customers. They just refer the customers. And what are some downsides of that?
I mean, if the operators just say, look, we just don't want to work with you anymore, they don't have this long-term sticky relationship. So, you could argue that the revenue could more easily go away than a lot of other subscription businesses.
Yeah, and I think another important thing is that these big casinos, they're not happy to pay money to this affiliate marketing business. They'd love by any means to do it on their own, figure out how they could do it by themselves. And so it's kind of a weird relationship if your customers are kind of working against you in a way.
Yeah.
And so that's also a potential risk.
Maybe we have one or two more, and then we should talk about some opportunities or some positive points. One that I'll mention is just regulatory and compliance. You know, somebody could come up with a law that says makes it harder for all of online gambling in the U.S. or Europe or whatever, and that could hurt their business.
Yeah, I think that's also important to touch on is that it's gambling. You know, we're not condoning gambling by any means, but it's important to recognize, you know, gambling, it's not by any means a good thing. I don't think many people look down upon gambling.
People could come down on it really hard, and it could change, you know, their whole operating framework could change pretty quickly. Yeah.
But there is also an upside to that, as in gambling has been a part of our culture as humans for thousands of years. And, you know, there's so much money and growth in it that we don't see it crashing as a industry.
I agree. And from what I can tell, it seems like there might be some new markets opening up. I mean, on the last call, they were talking about Missouri and other markets that would actually lead to more online gambling in a lot more geographies.
Yeah.
So do you want to talk about some opportunities or some positive points before we wrap up?
Yeah, so as we touched on before, they're a small company with tons of cash, and this is a big benefit because when they have tons of cash and lots of space to grow in the gambling industry, where there is lots of space to grow, they could buy more companies, and that could help them grow way faster and more efficiently by spending this cash on acquisitions and acquiring other businesses or companies like that.
Absolutely. I mean, they have proven that they've been able to make some acquisitions already. They talk about that, so that could be a one. I think the other one that I'll just end on is, you know, given the numbers that we showed earlier on this video, the growth they saw in the first quarter, their organic growth from their current business could be much, much higher than we're projecting at the 10%.
Yeah.
So that would obviously be a good driver.
It's insane, and we're being insanely conservative, and we think that the market and everyone is undervaluing their growth.
Yeah.
So we think there's so much upside for them.
Yeah. Should we do a couple fun facts before we wrap up and make a decision on this one?
Yeah, sure. So our fun facts time are probably not as fun as later episodes, but we think they're good for gambling. For me, there's 42% inside ownership in gambling, and we think that's a good sign if the company owns part of their business, because it, you know, there's motivation to do well for your business because it's your money too.
Yeah, I mean, look at like Meta, Mark Zuckerberg, Tesla, Elon Musk. It's been a good formula, right, for some of these companies, these founder-owned companies.
Yeah, like, I mean, Elon Musk, they told him, like, you could get Tesla stock if you do well for the company. And so it's always a good driver for the business if you own.
My fun fact is just that the CEO has been talking about $100 million EBITDA, like an operating income annual goal, which is really, it's not, again, not that fun a fact, but when you look at the numbers and you compare that 100 million in profit compared to the $380 million market cap today, like if they get there in a year and a half or 2 years, you can see how the company's worth a lot more than $380 million.
Yeah.
And that obviously will drive the stock price up. So that's my fun fact.
Nice. So right now, as we haven't recorded an episode in a little bit, we do have a good amount of cash on hand, around $280.
290.
290. So we're thinking we're gonna buy some of gambling.
Yeah.
But again, we talked about diversification and not timing the market.
Yeah, sounds good. So how much do you think we should buy? Maybe not all of that money, maybe like $150 to $200.
Yeah, that sounds good. Leave some cash over for the next episode.
Okay, sounds good. And then I think we should definitely take a look at CoStar and the possibility of selling and analyze that for the next episode.
Yeah, as you saw, we made a lot from CoStar.
Yeah.
And we think it's important to evaluate our portfolio and evaluate our standings.
And the computer says sell, so we got to analyze it.
Exactly.
All right, so we will buy some gambling.com stock and we will wrap it here.
Yeah, sounds good. Thank you so much for watching. Stay tuned for the next video.
Let us know what you like, and any comments or questions, always appreciated. Thanks for watching, guys.
Thanks.